It is a cash generating unit. These are nothing but an asset or a group of assets together. So CGU later will be dealing in detail is nothing but that asset or group of assets that are capable of generating cash flows. A standalone asset may not be able to generate cash flows. A group of assets may. For example, take this classroom. It's a very small example. The single chair mounting cannot fetch any revenue. Single projector alone will not be able to fetch any revenue. The so-called digitizer-enabled tablet or laptop alone will not fetch any revenue. AC motor will not fetch any revenue. But together, as a group of assets, they become a classroom, modular classroom, and therefore they are capable of generating revenue. So all these are assets, yes, but all these are not separately CGUs. Together, it's a CGU. If you are having a bunch of cars, engaged in the business of cab services, every car or every cab is a CGU. Everything can independently generate revenue. This is the basis. So CGU or a cash generating unit is nothing but an asset or a group of assets which can generate cash flows. For the time being, later we'll have few more attributes and all. For the time being, this is enough. One. Yediki sir CGU concept hai. As per AS number 28, only CGUs can be tested for impairment. Now, what exactly is impairment? Because the first time I heard the word impairment, I was only hearing impairment. Impairment. In the context, what is impairment, guys? All in value of asset other than due to depreciation. This is impairment. So effectively, end up in what was that? Varda. So Varda you will find that there are substantial amount of damages at multiple places. Huge amount of damages. And then there will be a dip in value of all the assets that you own. Let's say that in the last year when the entire Chennai floods had happened, you had all these YouTube videos and all wherein people are selling all these hi-fi cars, expensive cars at 5 lakh rupees. Jaguar XJ, 80 lakh was sold for 5 lakh rupees. You still can't drive. 5 lakh is also only sunk cost. You can probably have a restaurant with Jaguar car. But the whole point being, it came down to such a low price. So it still fetches some value, but there is a dip in value due to something externally happening. That dip in value from 70 lakhs or 80 lakhs to 5 lakhs is not because there has been a depreciation. There's an impairment. Impairment whole concept. Now the idea. In the concept, sir, such fall in value is referred to as impairment loss and charged off to P&L. Right? Are these impairment losses? How are they treated as timing differences? Or more particularly, are these tax deductible? Impairment losses are not tax deductible. Bear it in mind. Sariya? And always added back to the profits to arrive at total income. Which implies this will be a reason for difference between profits as per books and total income. Probably that's what you meant. Difference related. Now comes the question. Is it a timing difference or a permanent? These are in the nature of timing differences since these are offset by depreciation. See, once I am reducing the carrying amount, in future I will start charging lower amount of depreciation. Correct? So which implies to the extent I am adding now, tomorrow I will be having lower amount of depreciation. So therefore it is getting offset and therefore what? These are aggregated with depreciation timing differences. Are we clear about this? These are aggregated with depreciation timing difference. Impairment loss are always computed or measured after charging the guaranteed depreciation, which implies we compare year end post depreciation WDV as per books with the assets true worth on the balance sheet date to ascertain the impairment loss. Suppose if, for example, this question states that value was 999 lakhs. Its recoverable amount, true worth today is 555 lakhs. 999 lakhs is after charging depreciation for the current year. Follow பண்ண முடியறதா? இதுதான் status. Now, from an examination perspective, none of these are required to be written, documented as part of your answer. All these are understood. But since we are yet to discuss something called as AS number 28, it becomes important for us to understand these ideas first, document them also.